Ready to start. All right, guys. A very good afternoon, good evening to some. I'd like to welcome you to today's live Monday's webinar. I do apologize for the little miscommunication with regards to time. So we are now it's still GMT. It's GMT plus 2 now, and we are at 3:30 Cyprus time at this moment of time. Okay, so in the past it was 4 o'clock, and now it's 3 o'clock Cyprus time that we are doing this webinar every Monday. Okay, guys. All right. So once again, thank you very much for attending today's live webinar, and we shall today is a special version, mainly combining it with troubleshooting. With some of the traders have actually requested this, where we talk about trades that they have actually entered as of last week. We'll discuss the progress, but that comes from your questions as well. Okay, and we'll start off with a couple of things to share. I mean, as of market open today, we did go through the various market analysis from experts as well, indicating strength of the dollar. We're looking at more strength with the dollar. We're looking at depreciation of the Australian dollar as well, mainly with regards to the import figure for iron ore by China has actually reduced, so that has given some a bit of a knock to the Australian dollar as well, AUD. So that's another factor that we want to look at. I've got for you guys a couple of patterns spotted according to geometric patterns, as well as some harmonic patterns, so a couple of things to go over with you today. I'll start most probably with gold. I mean, I've got the gold chart, daily chart here, because we've got quite a number of requests wanting to know about gold's movement at this moment of time and what is going on with gold. And due to the strength of the dollar, we are looking at a bit of an opportunity for a bit of a shorting opportunity for gold. And I'm just showing you at this moment of time the daily chart for gold based on a Z-like pattern. I've just drawn this very simply for your understanding, and I'll start off by showing you gold on the daily chart, and then we'll take it progressively from there and go into currencies. Okay, because a lot of movements, most of the movements of gold, as I've mentioned many times previously, has got a lot to do with what's going on in the States and the dollar value. Okay, what's going on with dollar. So that is basically what would impact movement for gold. Now, as we're looking at gold, I've mentioned the last time of a probable Z-like pattern that I have measured its criteria based on Fibonacci ratios, and I'll just draw that very clearly for you, beginning with your A right there, and I've got my B here, and that's C, and that's the D. Okay, and as of last week itself, I've indicated to you guys during the Monday live webinar, where we still have got some space for a depreciation in the price of gold based on this particular pattern that you see. Now, this is called a bullish type pattern, whereby once C has actually ended somewhere at the D area, also called your PRZ, or potential reversal zone area, then we are looking at a probability for a price to correct itself, rebound, and reach skywards. Now, that reaching skywards, the other problem with that is it's usually not a significant large move or driven by momentum when it comes to this kind of pattern. What I mean by that is that upward move would most probably be, I would say, about 50% of C to D. Okay, if at all it's giving us more push in that side, then you're looking at 61.8% to 78.6%. Okay, so what you would like to know is that once prices have actually reached that area, then there is a chance for it to actually appreciate further at least about 50+%. But that move hasn't actually, that downward move, let me just explain that further and clearly. what I'm actually expecting at the moment for prices to go further downwards, okay, and to reach this area here. That's usually you've got two options of the D point, okay, for the what do you call that? For the Z-like pattern. The first option, of course, you've got AB, okay, equals CD, right? Let's do that. I do apologize for this very bad writing using this program. AB equals CD in terms of length. That's your AB, okay, equals CD. So we've got that first line at 1233.11. That's your AB equals CD option. Okay, that's the, now we're looking at the probability of where prices could fall to, because it's still, it hasn't really completed that. So still looking at potential drop for gold, and if it does actually, if the bears are dominating, and we're looking at that as your first area. Okay, a second area, it's usually about 50% of B to C. Okay, so got 50% of B to C. All right. Okay, so this is where I would then pull my Fibonacci and pull it from my B, because my A is there, that's my B, and from B onwards all the way to C, then all you do next is to mark the 50% area right there. So now you've got two options. All right, so the probability of prices dropping would be between the 1233.11 area to the 1212.49. Now this is based on principles of geometric patterns. I mean, you could find this on Google as well. It's called the 5-0 pattern. I just turned that into a geometric pattern by drawing extra lines on it, and have got my own rules of Fibonacci, of using the Fibonacci ratios. Okay, but I sort of mix and match, but then that's not originally mine in terms of the Z-like pattern. It's available. It's called the lazy Z pattern if you want to look it up on Google, or you could also type 5-0 pattern and you should be able to find it. Okay, but that's based on the principles of that pattern itself, and what I've done so far is to tweak it and sharpen that analysis, and we combine that with the price pattern, price model as well, and then we trade it that way. Okay, so looking at this possibility here, you've got option one giving you prices, a price probability of prices dropping to the 1233 area as indicated here. That's when you take the AB length equals CD, and then secondly you've got the 1212.49. That's 0.50. That's close to the 50 cycle level as well, and these lines gives you the probability of gold's prices dropping to this area. Okay, that's why I use the word probability. So this is where I'm looking at the gold's possibility of a drop into that area, and this is based on the daily chart. Now, any questions at all from you guys on gold so far? I mean, what are the challenges that you're facing in terms of based on your analysis? And you can always share it here. You can ask more questions at the end as well. I'll just bring you guys to shorter time frames, and we shall then see whether or not we've got a different view to it, or shorter trading opportunities based on shorter time frames. Okay, so I'll just erase all that first at this moment of time, and we're looking at that clearly on a daily chart for gold, and I'll just take that away. Okay, and what we will then do is to look into the 4-hour chart right here. Okay, and this is how the 4-hour chart looks like. Okay, and we have got, I mean, based on the 4-hour chart itself, I see some uncertainty going on. We've got prices for gold in between the three lines of it. Prices has not really appreciated further, meaning gone past the three lines, right above the three lines. It's trading in between the three lines at the moment, finding support most probably at the 100 moving average area. If I zoom in a little bit there, you'll be able to see the price action itself, and you can see that it's found resistance right on the dot at the 200 moving average, exponential moving average. So the three lines, just to remind you guys, I've got the 200 200, 150 exponential moving averages right there, and we are looking at bit of uncertainty going on. Prices or candles, majority of them are trading in between the three lines. Now we have found a strong resistance area right there. If at all I were to look at this high peak area and pull my Fibonacci right to the base, I just would like to look at whether or not it has found any resistance um, on the dot at any one of the Fibonacci ratio. In this case, it's in between the 50-38.2, but what's most significant or clear is that prices has found a sort of resistance at a 200 moving average, which gives us a bit of a hint that the bears are dominating at this moment of time. Now, this is based on the 4-hour chart. As we move along to the 1-hour chart, let's look at what's going on. We could then look at some dominance previously with the bulls here. It has pushed prices up, and now what's going on is that we've got prices testing one of the moving averages, one of the exponential moving average, which is the 50 moving average, and we've got prices here thinking and the price that they are thinking on, I mean the traders themselves are quite on the dot of the psych number as well, and we've got it at 1273.20. Now I would like you guys to be aware of the price that gold is trading at this very moment of time. We've got it at 1273. Okay, now here itself with the round number 1273, that 73 itself, it's really close to this, to the 80 psych number, and then you've got it at the decimal point, and you've got it at 0, 1 as well. Within that, or 1 or 10, it's in between the 20 psych number as well as the 00 psych number here. So what's happening, just as a summary, with price action itself, is just too close to psychological levels. It's trading in between these psychological levels as well. So we would like a break out of the psychological level, whether past 0.20 or past 80 or under 80 or even under the 00 area. So at this moment of time, we've got all these prices here creating a kind of range on its own. Okay, it's got a level of range made up by the psychological levels itself. So we need more pressure downwards or above, meaning a bit of a breakout above the 80 or above the what do you call it, above the 50 further, because we've got it at 0.31, 0.40, and then we've got it 20. So you could see it as it is based on the candles itself, that they are actually playing in within the psych numbers. But if you take it as a round number here, 1273 itself, to the upside you've got 80. Okay, you've got 80 as a psych. So once it goes beyond 80, like 1290 and above, then you've got more comfort in thinking that you've got more participation by the buyers, pushing prices a little bit more. At this stage, it's a little bit too early. We've got some dominance, as you can see, by the sellers as opposed to the buyers. Okay, now if I just take that off, clear all that drawing away, clear all that drawing and put that all away, and we'll look at it from this angle. Okay, I mean, once you've zoomed in, you could then look at how that angle of clock itself here is rather weak. If you turn that into a channel using clock angles, that is more or less like a 2 o'clock sort of angle. It's not that steep, giving you a 1 o'clock-ish angle, so that is not happening. So that's not giving us any hint that the push by buyers are really strong. This is based on the gold on the 1-hour chart. So here itself, we've got a bit of a challenge there. There may be a possibility for it to go further up or so, but then that angle that it's trading creates a channel, so there's always a possibility to play around there. But again, as far as it plays around, that is still a 2 o'clock sort of angle, so that's not enough, not sufficient to create that momentum. An angle that is steeper towards the 1 o'clock sort of angle would be a better angle the steeper the angle, the better it would hint us for more buying power to the upside. Okay, so that's basically it. Now this is on the 1 hour chart. Now what I'll do is I'll just very quickly move on to the currencies, but just before that we'll go on to a lower time frame just to give us a bit of an idea what's going on the shorter time frames as well. Okay, and let me just, all right. Now forgive me if it's a little noisy around me because we are on the trading floor at the moment, so it's where the action happens. And we've got most of the team members here as well. They would discuss on currency movements with their clients as well. So hence the reason you'll hear a lot of noise, but I only call it trading floor action going on. Okay, so this is on the 1 hour chart. Let's go into the 5 minute chart and look into what's going on. And if at all we're looking into uh, the chart itself here, we're looking at a 5 minute chart, and I'm just waiting for it to settle down in terms of the chart itself. Okay, now once we're looking at, I mean, this is the shorter time frame. We've covered the 1 hour, the 4 hour, and the daily. We're looking into the 5 minute chart, and as we can see, I mean, I always like zooming out a little bit. I mean, apply my three moving averages, which are the exponential 50, 100, and 200. And here itself, we're looking at prices 1274 and 0.95, 0.80, and stuff like that. It would still be struggling. It looks to me like prices itself, from price action perspective, it's struggling within psychological level. So we'll leave that aside. We'll look into the candles itself, and we could then zoom in a little bit, look into the position, the type of candles that are at play, and we could then see that we've got a bit of a push with prices to the upside, but there's some uncertainty going on whereby we've got the entanglement of these lines. Now these three moving averages as well, exponential moving averages, are not giving us a clear cut direction, you know, being far apart from each other or moving at a particular angle. They're not doing that at the moment because you could see they're entangled. You would always want to look at the three moving averages separated from each other, giving you a clear direction whether it's up or downwards. Okay, and that would be a better play for it. Now here we could see that it's found a bit of a resistance there. We're looking at the 5 minute chart to remind you, and once I've created a zone, let's say I've got the highest candle there, right there, that's a higher candle there. Okay, but even based on this area here, highest candle there and highest wick right there, so that would give me a bit of a zone. Now that is the resistance zone going on based on the shortest time frame, where you've got prices ranging from 1274.61 right up to 1274.86. Now that is an area where we could then mark it as a resistant area right there. So prices would need to go above that 1274 and above to give us more indication of bias dominance. Okay, and once that happens, if prices does go above that 1274.86 area, that would automatically be above the three lines as well. Okay, but that's purely on the 5 minute chart. As we go on to the 30 minute chart, let's see whether we've got any difference in terms of the view right there on the 30 minutes chart. I'm still leaving the two lines marking the resistance zone right there. As you can see, prices now, candle itself, we're looking at a live chart at the moment, and you can see that the candle itself, the opening body or opening price of that candle, it's bang on that that line right there. Okay, so it's found that resistance area there to be quite significant. We have got longish candles piercing through that zone, which is an indication that it is quite a wall to break. Okay, that zone area. We've got various, as you can see, if you go to the past, previously we've got all these long candles through piercing through that zone as well. So this is it's a good sign when that happens. Okay, when you've got a zone like that drawn, a support or resistance zone, and you've got number one, you've got longish candles piercing through that zone, and then you've got various support and resistance in that zone. If I pull that back, let's say I go into my 1 hour chart, you could see that you've got resistance in that area, close to that area, but then again you've got resistance, you've got a couple of support as well previously, and you've got longish candles piercing through that zone. Now once that happens, you've got piercing through of longish candles, whether they're bullish or bearish candles, and then you've got various support and resistance happening at that zone, then that actually means that you have drawn that zone correctly, and that should be the way that you would line up your support resistance as a zone as opposed to just a single line. Okay, so there we go. Now we've got a long way for prices following the 1 hour chart to be under the 200. As you can see, it's a long way downwards to give you more signal to the downside. So at this moment of time, I would like to use that resistance zone as my buffer, or as an indicator to look at what are the bias, whether it's to the upside or downside. So you could treat that as more or less like a border. Okay, that these two lines here. All right, and once prices have actually pierced through up, creating strong support, especially if prices for gold have actually been pierced, it has actually pierced through, let's say, this zone with a longish bullish candle like this, then it would then create a good amount of support. Now if I go on pulling A to B like that, let's say, and I find that it's at the 50 angle, but it found support at this area, you can always adjust from body to body if you want, and look at whether or not you've got a clear nice touch there, and that's closer to 61.8. You can always look into that zone again as an indicator. Once prices have pierced through 1274.86 and above, you've got a better chance for prices to look skywards. Okay, so let's monitor prices at this moment of time. I mean, it's also crucial for you guys to look into what's going on in the news at the moment. I'm just checking with regards to fundamentals as well. Let's see whether I've got anything that I could share with you guys on the dollar. Latest news on the dollar, of course, as of this morning itself, it's got a lot of news on dollar regains, and you've got strength there, and you've also got dollar impact based on Fed's expectation on a rate hike and things like that. Now what I do is that I've sent that on Telegram as well for you guys who are with Orbex as clients as well, and I've put a mention that this week would be quite a packed week with fundamentals, data releases, and you've got central banks decision on interest rates and things like that. I would line that up based on what would impact the market. I would see that BOE would be the first one in line to actually create more impact, and then followed by BOJ, and then you've got Australia right there, RBA, and then the last would be Federal Reserve. Now I'm talking about this just lining up, looking at the impact on various angles. Okay, could be geopolitics, and it could be the Brexit thing, and everything else would create more impact, more trading opportunities as well for you guys, based on the pound, based on BOE's decision and things like that, and comments as well coming in and out every hour on what's going on with the UK economy and all that would create much more impact. Okay, so now we're off with gold. I think we're done with gold. Unless you guys have got any questions, you can always ask me at the end. We'll just go past gold at this moment of time just for you to get an idea of what's going on. Now as we go on to USD/JPY, now I'm looking at the USD/JPY on the 1 hour chart. Okay, I'll just clear off some of the lines here, perhaps this horizontal ones right there. I would like to show you on previous ABCD. This is the pattern, or the geometric pattern, that we've indicated the previously last time. Okay, we've got the ABCD. Of course, price appreciated further, but we were not really bothered with that. We were trading between C to D, let's say, for example. This is a bullish ABCD, and the first way in projecting that area there is simply to have AB's length equals CD. ABCD. Okay, and that's your ABCD on the USDJPY. That went on really well, and in terms of ideal entry and things like that, we the way we convert an ABCD pattern into a geometric pattern is simply to attach A right to D. Okay, and what I look for is the center point where the two axes have actually met. I call it the centroid. Okay, this area here, and that has indicated to me a price of 104.50, let's say, because I make the 498 to 50, 104.50. And that centroid itself, as you can see, would usually, most often than not, indicate a significant support or resistant level or area. Okay, as you can see here, you've got quite a significant support right here, and then we've got some resistance there. As you look back or go on to higher time frame and just give it a bit of an experiment, looking at how significant or how strong that level has been. We've got some resistance there. We've got it pierced through by some longish bullish or bearish candle as well. So here itself, we've got quite a number of support and resistance right there. Okay, so that's a good sign. Once you've got that on the centroid itself, on ABCD, it's just a form of revision for you guys for the ABCD. So here itself, we've got the ABCD looking as such. Let me just polish that up a little bit. This is the one that we're looking at. Okay, so we've traded, that's your A right there. I'll just clear off the center line. We've got your A right there, B, C, D. This is called a bullish ABCD pattern, and we were trading from C to D, and then we attach A to D to look at the ideal entry point. Okay, so that's using that example. We have got the first way of forecasting the D area right there. But of course, you've got all the backup following the price trade plan and all that that we teach here at Orbex in order for us to balance up both technical and fundamentals. Okay, so we have got more backup on fundamentals, data releases as well at that time to give us more hint that prices would go up at that time. So then we we found that formation, that ABCD formation, and what we then do or did was to attach A to D to look for your ideal entry area. Of course, we polish that prices up with psychological level as well. So ideally, following principles of psychological numbers, we would then be adding 10 pips at least above the 50 site number. So that 104.50 would be your closest psychological level. Then you add 10 pips above that 0.50 to give you 104.60 ideally. So it wouldn't be that exact line that we would be entering. We would need to incorporate various principles. One of it would be the psychological numbers principles, where we adjust whatever price that we see on the centroid area to psychological level, and then that is where your D could be projected to, and that's roughly at 104.96. And again, if you were to be conservative in your approach, you could always adjust these prices here to psychological level as well before it hits the psychological level. Now 0.96 is closest to your 0.80, so you're taking your TP ideally before it reaches 80. So 104.70 would be your ideal, and that was discussed the last time on Monday, if I'm not mistaken, and last week, and that has actually gone through really well, and have have got some traders pocketed pips in that area. So that was good for you guys who have actually done well with that pattern there as of last week. Now let's look at what's going on at this moment of time. We're looking at 1 hour chart again on the USDJPY. Let's start from the very basics. Let's just zoom out totally, and let's look at it from an angle here, clock angle. Okay, let's just get rid of all the objects, indicators that we can see. Let's look at what's going on. Now we have got prices here from a zoom out perspective, always from a zoom out perspective, and we take that as a cluster of 3 time frames. We'll start off with 1 hour, and then we go on to 4 hour, and then we go on to the daily chart. But like we've mentioned earlier on, we'll just look at the 1 hour chart at this moment of time, and simply look into the biggest move that your eye could actually spot and draw a sort of line there just to look at the angle from the lowest part here, the lowest area that you could see price were, and then you project that upwards to the price now. And let's look at the price at this moment of time. It's giving us a price of 105.03, and we're looking at an angle right there. Now that angle here, this is crucial for us to just visually look or guess that angle upwards. Okay, I've not drawn that very nicely or very close to this area here, just like that. Okay, now if I were to have an angle this way, okay, this would be more like a 2 o'clock sort of angle. That here could be, this area here would be 2 o'clock, further upwards would be a 1 o'clock, right to the very top would be a 12 o'clock sort of angle. So here with the USD JPY itself, we have got an angle that is closer to the 1 o'clock-ish type angle, which does signal to us a sort of strongish bulls play, or play by the buyers to be significantly strong if it's a 1 o'clock type angle. Okay, let me just clear that off. Give me a second. Okay, now we've got that angle there. Now let's say if we were to just very quickly go on to the 4-hour chart. Okay, now as you can see, that angle got steeper as you have drawn that. Okay, that was the same line that you've drawn on the 1-hour chart, and you could see that if you were to imagine that angle or that red line to be the hand of your watch or the clock, then that steepness indicates more strength for the buyers. Okay, so that's a good indication for more pickup of the uptrend as opposed to a downtrend for the USD JPY, because we've just moved from the 1-hour chart to the 4-hour chart. Okay, so from short-ish term to a medium term. Now that, in saying that, as we zoom in, the behavior of candles as well is worth watching. It's worth watching because it's good to know that you've got the support right on the lines, either one of these lines, and that gives us an indication that the support was pushed up quite strongly. Okay, and we've got the prices went up from this point, this area here, appreciated, and then made a correction, and that correction was at one of the moving averages, and that's a good sign when you have got more of these what you call that supports that were concentrated or based on the moving averages here. That's a good sign when you see the correction rebounding, or that prices rebounding from either one of the lines, and you know, if it is the 200 as well, it's, you know, it's a good sign, because that's one of the strongest moving averages that you have, your average of 200 days. Okay, so we've got that now, USD JPY on the 4-hour chart, and we could see that price itself is at 105.02. The zero point 0.00 area is quite close to the site number, so it's best for us to look at what would happen further in terms of its appreciation of price, whether or not you could see more momentum pick up above the 00 site number by at least 10 pips. So you've got a 105.10 to look out for. I mean, the next one as well is 105.20. So between the 00 and 20 site number would be best. It would be best for us to look into price appreciating further above the 105.30 for you to be if you were to be conservative or very aware of the psychological numbers, then you want to be looking at these two levels, 105.00 as well as 105.20. Okay, so these levels, to be conservative, meaning you are able to wait further for prices to further appreciate above the 105.20, right up to 105.30 or so, then you've got more comfort in thinking that the bulls are actually in play. At this moment of time, it's sort of in between. We've also got candles not really giving us that indication of a momentum play by having it rising above and creating strong long bullish longish type candles. Okay, not just yet, but we are looking at the just angle itself. The clock angle itself is giving us a bit of an indication that the bulls may be at play here compared to the bears. Okay, now what's happening with the daily chart here now? I know I have quite a number of times given you guys a hint on an upside down cup based on the daily chart. Okay, I'm going to draw that again for you guys, just for you guys to have a bit of an indication of what may be going on at this moment of time. We do have a bit of uncertainty signal to us at this moment of time with prices going in between the three lines. Okay, but we have got quite quite a good appreciation of price at this moment of time. I mean, compared to what we've mentioned perhaps about 2 to 3 weeks ago, or probably about a month ago, we only had that cup-like pattern. This is an upside down type pattern here. Okay, I would like to just mark that area here because we've got loads of price concentration there, various support, and most importantly, we've got a bit of a range trading going on. Okay, that area there, let's just say here, because I like using that, and I've seen that support. They break out of support there as well, so I'll just use that line here and this line to indicate that sideways sort of move. Let me just zoom out a little bit more. Now this should be clear for you guys to look at as an upside down type pattern. So as of last month itself, when I spotted this pattern, we did share this. I did share this during the Monday webinar, giving you an indication that this upside down cup potentially, oops, don't know how that happened. It brought back all the other drawings. Give me a second. Okay, so let's say we've started this way here. This upside down cup could well be shaped or formed as such. Okay, now the upside down cup or just a cup and handle should be made up of a cup and a handle. Now in this case here with the daily chart, the USD JPY, we've got that cup formed, but not really the handle side of things. Okay, this was also shared by CBank previously, talking about a symmetry of lines, talking about how we've got a symmetry as such. Okay, this way the distance or the number of pips there equalize the number of pips there as well, and this symmetry usually indicates a sort of possible or probable push to the upside. Okay, so that was based on the symmetry principles, various other reasons to believe that, and here we're just talking about the cup and handle pattern. So I'll just go over with that first. I'll just redraw that to make that clearer for you guys. So let's say if that's the cup pattern here, what's missing is your handle. Now the handle is usually made up of the upward movement. Okay, it's a zigzag upward movement that could be called a channel. So we're expecting a zigzag move upwards. Okay, how far up would then be, questionable, but of course based on the cup and handle pattern, it's usually about 50% the length of this area here, the mouth of the cup, the base mouth here to the base of the cup here. So that 50% roughly will give you an indication of where prices could end up stopping and finding a bit of a downward momentum and then correct itself again and then all the way downwards. Okay, so the downward move would be equal to that distance in number of pips as well. So whatever you see in the number of pips here, the potential probable move as well would equalize that. Okay, that's what we're looking at, a possibility. So here the zigzag move should be forming a sort of channel upwards like that. Okay, and this is what we're looking at, and at the time that we have talked about this, ample of times during previous webinars, the handle has not actually really moved, or the prices have not really entered these three lines, but now it looks to me like prices have actually gained more momentum as it did previously, and has gathered more energy as well in piercing through one by one the moving average line. So that's a good sign, because if it does actually do that and you've got more appreciation of the dollar versus the yen, then that would then complete or try to complete that handle formation of the cup and handle pattern. Okay, and once it does actually reach that level there, then you're looking at more drop, because this sort of pattern, if it's an upside down cup as opposed to a normal cup and handle, the upside down cup is a bearish type handle, even though because it needs to complete that handle part before it falls further down. Okay, so that's basically my take on the USD/JPY, the daily chart based on the cup and handle pattern. Okay, what I'll do next is we'll just clear off all these and look into a zoomed in version of what's going on in terms of other type of patterns. Okay, redo that, and I'll just zoom in a little bit. Let's look at what's going on now with the price action itself. If you're looking left to the current price itself, you're looking at prices trading at 104.99. Now that's just pips away from the 00 psychological number. So I would prefer to look into more appreciation of price past the 105.00 area and above in order to coincide with being above that 200 moving average, if at all we want to look at more hints to the upside for the USD versus the yen. So now it's a little bit too early to really look into deciding it's a strong upward trend or anything like that, because we've got a challenge, and the first challenge would be the 200 moving average right here. So we may then look into price appreciating and playing around that area there. Okay, because that's where the 200 moving averages are at the moment. Now that's based on the USD/JPY on the daily chart. Okay, let's see. Now here itself we have got quite a number of possible pattern here itself. Of course, we could always look into various patterns, but here, I mean, just off the bat and upon the first glance itself, there may be a possibility of prices going further up, being played by a possible Z-like pattern like this, because we've got a price up like that. Okay, now this is what I'm looking for, this fall, and then you've got a correction there. Okay, in order for it to then highlight to me a probable Z-like pattern, which may begin with the A to B right here. Okay, so if it does actually then go further up, I would then need to use the Fibonacci to look into areas of probability for that price to increase further. So when I do that, I simply take the A point to the B point and look for probable extensions. Okay, now just drawing that coincidentally, it met the 161.8 area here. Okay, that's quite a significant ratio extension, Fibonacci extension ratio. Of course, you've got a 1272 as well right there. Okay, now these are the Fibonacci extension ratio. One of my favorites, I would say, would be the 161.8 and 1272.2, which does coincide with the 78.6 as well as a 61.8 Fibonacci ratio. That's the reason why I've chosen these numbers. So these numbers here are sort of customized. They are not the default. You would need to add these ratios onto your Fibonacci. Okay, now I do see a possibility once it's or a probability once it goes beyond this area where it's marked by the blue line, or the dark blue line, the 200 moving average. Once it goes above that area there, I do see a possibility of it finding resistance in either the 127.2 or the 161.8. So in saying that, there are room for prices, especially USD JPY. I mean, if you combine that with news releases and positive data pushing prices further up, then you're looking at a chance for the USD JPY to further appreciate and go above that line there. And but then at that time, once it goes above, then you would need to look out for the 109.74 area as well as the 112.50 area right there. Okay, so that's one possibility, but let's just look into the other possibilities at the moment in terms of perhaps other types of pattern as well. Okay, now here itself, if I were to zoom this way, um, we're looking at that from a daily perspective. Now we're going into the 4-hour chart and looking at the behavior of candle, and that was what was mentioned where prices found support at the moving averages. And then I just want to look into the hourly chart, and it's the same with the hourly chart as well. As you can see, we've got lots of support area. Okay, right. Coincidentally, finding support or strongish type support on the moving average line, and that sort of built a bit of a step like, but that step is an upward type step, and that angle itself, I would say it's angling towards the 2 o'clock-ish, or perhaps 1 o'clock-ish, but in order for you to do the clock angle type technique, it's probably best for you to always zoom in, okay, zoom out totally, so that you can then get a gauge of the steepness of that angle. Now here itself, you've got that steepness to be quite on the 1 o'clock type angle. So again, on the short term, medium and daily, we're only looking at more probability or possibility to the upside based on clock angle principles alone. Okay, for the USD versus the yen. Now here itself, just looking at the 1-hour chart, I would like to just share with what I've found so far is there's another possibility of a Z-like pattern here. Okay, because let's start with the A to B right there, and I'll just explain what this means to me. Now here I've got, once I've pulled the A to B downwards, I found that prices have reversed or rebounded quite nicely at the 161.8% ratio of the Fibonacci extension. Okay, now that's a good sign for me. So what I would then do is to go all the way up this way here, okay, and look into the USD JPY as having a bit of a potential to the downside for now, but this is a bullish type pattern, so we're looking at that possibility down here. Okay, but this is where we would like to first be very sure that we're looking at the 1-hour chart as such, giving us opportunity to the downside, but overall on the long term, this pattern itself does give us a hint that it is a bullish pattern. So eventually, once prices have actually reached that area there, then you would see some potential to the upside. But it's probably best for us to pull the B to C, okay, and look into the 50% area right there as a potential area prices could fall to. Okay, but here I would like to just remind you that the Z-like pattern, okay, you've got a pattern like that, okay, and that AB could be equal as well to the CD, right? So we've got price going beyond the 50 area. Oops. Okay, and we'll just draw that line previously drawn again this way, all the way down. Okay, so that's the potential. So what I'm saying is we are looking at a C to D move downwards at the moment. Okay, and usually what happens is that C to D, that's your C to D. Okay, so your first line is where your AB equals CD. All right, your second line is by pulling your Fibonacci from B to C and mark the 50%. So that gives you that zone of a probability of how much the dollar could fall before reversing upwards again. Okay, so that's based on the 1 hour chart. Okay, this is what you should be looking at, sort of an opposite type pattern on the goal. So we'll definitely go and visit goal again later on to look into various elements based on your questions as well. So this is what I am looking at, the USD versus the yen on the 1 hour chart. This is the probability. So you've got your A here, okay, and the B here. All right, and what usually happens with the C to D drop downwards is to sort of create an A, B, C, D before reaching the D. So it's no surprise if at all you're looking at a price drop, but then a sort of major correction. Okay, that correction could be either the 61.8% or 78.6, it doesn't matter, and then from there itself it'll be giving you guys a bit of an edge in trading based on the pattern, because once you're looking at the ABCD here, then you can treat that trade there as an ABCD type pattern, aiming it, and that would then help you generate more lines here. Okay, so you've got the ABCD of a Z-like pattern combined with an ABCD pattern right here. Okay, now that if at all that ABCD does actually happen, then that would turn out to be an M-like pattern here as well. So we've got a bit of an amalgamation of patterns going on. Okay, or combination of patterns. Okay, so that's your USD/JPY. Let me just clear that up first. Okay. All right, now that is based on 1 hour chart. We'll go on to the 4 hour chart right there. Now this is what I would like to show you guys, the movement of the 3 moving averages, to be clear and clean, giving you a bit of an idea how you should be looking at the 3 moving averages. These 3 moving averages here itself for the USD/JPY on the 4 hour chart looks to me really clear to the upside, signaling an upward type move because you've got them all separated in between them. If I zoom in a little bit more, you can see that the direction of these 3 lines as well is pointing upwards at a nice sort of angle, and they're not they're not entangled or touching each other. Okay, I think I've got some questions going on. Yes, that's right. We are at the trading floor at the moment, so we are looking into. We were having quite a number of people around us at this moment of time. But yes, this gives you a chance to focus and concentrate much more on what I'm saying, and I know I myself have got to do that in paying more attention to what I'm saying and what you guys are asking as well. Okay, it's a good practice. Now, any questions at all with regards to the USD/JPY 4 hour chart that we're looking at, or any other questions? We could definitely look into pairs that you guys are interested in looking at as well. I think we've got some requests on Euro/JPY earlier on with the oil prices as well. So we'll look into oil and the Euro/JPY. And what about you guys? Any request on pairs that you guys are interested in looking at all? I'm just going to the oil prices. I know we've got more news talking about superpowers, countries that are not ready to cut their production, so that would be a hint for prices to drop. But what I'll do here is to look into clearing up all these lines, and we'll just look into whether or not patterns would support the claim by mainstream media as well, talking about drop in prices. Okay, I think I've got some questions coming up. How do we identify? It's a question by Tian Shunmon. How to identify the correct or perfect ABCD. Perfect is a very strong word in the world of probability, but I think I understand what you mean. I mean, for me personally, let's look into the ABCD pattern as itself. Okay. In my opinion, the ABCD pattern should be traded using a lot of Fibonacci as your confirmation. Okay, but firstly, it's the angle as well that is quite important. Okay, now you've got an ABCD like this, right? That's your A, of course. Okay, and then you've got your B, okay, C and D. Your question is, how do you identify? So I guess what you're asking me is, how do you start looking for that formation and whether or not you would be sure that that is an ABCD. Okay, correct me if I'm wrong. So what we do usually is we always want to look, first step is to look for a rally. Okay, a rally is a movement either up or down. Okay, this is a bullish. Let's just use one example for the ABCD first. Okay, now when you've got a move up or a move down, now this is a move upwards, the next step is to look at whether or not you've got a correction like this. Okay, so it's more or less like this and then like this. Okay, and then you want to look at a little bit more correction upwards again to repeat that movement upwards. So you want to always be spotting an upward sort of move with a correction and then a mini correction again. Okay, a sort of movement like this. Now let's do that together. Let's look at this one here. Okay, the most recent movement for oil. We're on oil daily chart, let's say. Okay, and the most importantly is, if I was to look for an ABCD pattern, I mean, in my personal opinion, the most important thing to first do is to identify the trend. If at all we've got a downward trend expectation, let's say for oil we're expecting a downward move. Now, with a downward move, I would be more interested in looking for downward ABCD or bearish type ABCD pattern. If in a bullish or highly priced, what do you call that, asset or instrument, and looking at more increase in prices, then I want to look at bullish type ABCD. So you want to match the type of ABCD with the type of trend. That's your first step. Okay. We've got another question here by Niti as well. Could you please show on GBP AUD and AUD USD? Okay, let's do that then. We can do that. We can use Tian Shunman's question on ABCD onto the GBP AUD and AUD USD. Okay, so let's do that. Let me just write that down first, because I've got quite a number of pairs here to look at from previous requests as well. Okay, let's do that. Let's look into GBP AUD. Okay, I've got my GBP AUD here. Right now, this is a good one that we have discussed earlier on a failed pattern and why did it actually fail as well. But let's just take it one step at a time. Let's look into the GBP AUD. Let me just clear up all the objects that I've got. Okay, let's look into I'll just go into the 4-hour chart. I like looking at patterns on a 4-hour chart most of the time, because we've got more price action going on there, and you know, the formation of price sometimes is quite clear, or formation of pattern could be quite clear. Now, let's look into this. Okay, we have got, first of all, I mean, with the GBP AUD, for the guys that are familiar with my webinar and have joined me, what are your summary of trend? I mean, summary depending on the 3 time frame: 1 hour, 4 hour, and daily. Have you guys, like Niti, for example, if I may ask you this, have you actually identified the trend, or you know, with fundamentals as well? What are your thoughts on the GBP versus the AUD? Is it more to the bearish side in your opinion, or is it bullish, or is it uncertain? Perfect. Okay, so when you say bearish, you are taking a cluster of 3 time frame, I would guess. Yeah. So let's say we do this in practice. Let's say we go onto the 1 hour chart. Okay, and we look into that that angle itself, you could see that from the top right down here, you've got an angle. Now that is a sort of a 5 o'clock-ish type angle. As I zoom in, I can then see that prices have gone under the three line. So that under the three line sort of thing is giving me a beginning of a downward sort of move, because the price of candles, or the candles, sorry, or prices have just begun to go under the three lines. But there is a bit of a challenge here. We've got the three lines. The angle of the three lines itself is sort of a sideways trend. Okay, now it's a sideways trend, or a 3 o'clock type angle. You see these three lines itself, if these three lines are pointing downwards as well, then you've got more momentum to the downside. So there is something that is preventing it from becoming a strong type uptrend, a strong type downtrend at this moment of time. Okay, and you can see that by the way the candles are moving. Okay, now that movement itself, let's say from the peak here right down to here, you could actually see more dominance of the bearish candle as opposed to a bullish candle. Okay, the reason is that you've got more bearish candle than bullish candle in terms of the count of candles. And when you look at the bullish candles, the empty ones, okay, you look at them and they are not as many as the bearish candle, and they are not as long or as strong. Okay, you've got this strongish, more power by the bears as opposed to the bulls. Okay, so that's one indication right there. So let's just look at the angle itself there. It's quite strong. Okay, let's go on to the 4-hour chart here. So what I'm trying to do now, before we actually spot the ABCD pattern or so, is to identify trend first. Okay, now here itself on the 4-hour chart, we have got loads of resistance area right there. Okay, and coincidentally it resisted at the one of the moving average, which is the 50 moving average as well. Now that is a good sign in a way, giving you a bit of a stronger feel to that resistance zone. Okay, so you may have got more power to the downside as opposed to the upside. Okay, so just by having, oh, give me a second, just by having that in mind, by comparing the 1-hour and 4-hour, I've got more hint to the downside based on trend. Okay, so just based on the 1-hour and 4-hour, I should be looking at possibility of ABCD to the downside, or bearish type ABCD, as opposed to the bullish type ABCD. Okay, so here itself, if I go on to firstly clearing all that up, let's say daily chart right there. Okay, now here we have got quite a clear view, just at a glance, in terms of the trend based on the moving averages as well as the angle of how the candles are trading. Okay, so here itself, let's say you start from here all the way down. Okay, now this could be looking at the bigger picture as well, Tianmun. When you've asked me how do you actually spot that, now firstly I spot it by identifying the trend. Okay, and what I do next is I look for the bigger picture. The bigger picture meaning the biggest possible move down here, for example, because it's a downtrend type move for the GBP AUD. So I have got that already here from bigger picture. I've got a big ABCD. Always want to start off with a bigger ABCD, and then you can downscale and look for smaller ABCD patterns. So here itself, I've got the A right there. That's the rally I was talking about. And then I found a bit of a correction. Okay, so that became my C pattern. My C area, or C level, and now I'm actually predicting and wanting to know how far more could it actually go. Sorry, A, B. This is B, yeah. Sorry, this is my B. Okay, and C. So I'm looking at where the D could actually go to, right? So this is how you identify it, by looking at a drop down in price, okay, a rally downwards, and then a correction, and then further downwards. But then we are trading from C to D. Okay, we are trading from C to D, right? Now, got that question there. Okay, bearish, yeah, brilliant, good. So this is what we're talking about. I think we're on the same page on this one here, Nitty, on GBP AUD on a bearish type call. So this is how we roughly identify that ABCD. Okay, so what you need now is a backup on the fundamentals. I know that we've got more backup of news and fundamentals and data that are pointing towards the bearishness of the GBP and the bearishness of political scenario, economical scenario of the UK. So that should actually pull prices for the pound much more. Okay, what you would need to confirm then is whether or not the pound is depreciating much more than the Australian dollar by looking at fundamentals and data for Australia, whether or not on Australia's side compared to the pound it's actually stronger. Okay, once you get that, then that's a backup of this. Then we can go further into polishing this ABCD very nicely into looking at how we can do that. So let's do this together. Okay, let's just draw this properly this moment of time. Let's just draw the ABCD pattern using clean lines. Let's look at that move here. This is what we're looking at the moment. Okay, so let's do that visually, knowing that that's your A area, B, C, and then we're predicting the D side of it, whether or not we've got more room for D. Okay, so I'll start off with the A right down to B. Okay, and we've got a correction right there. Okay, we're not really sure whether or not that C point is, it should be a minimum of 38.2%. I don't really use the lower than 38.2% as my C. Okay, if at all it's lower, then I might not take that trade or go further into analyzing or drawing that pattern. So we will do the Fibonacci in a bit, but let's say we just do the ABCD first. Okay, so you got A, then you've got B, then you've got your C area right there. So once you have got your C area right there, okay, you then proceed to predicting or forecasting D. And how do you do that? You do that with the first option, AB's length equals CD. So what you do is you double click on that one there, you move that all the way down there, okay, and then you have got an area that you would forecast the D to be. Now prices, as you could see, has gone beyond that. So once it's gone beyond that, it gives us a bit of a hint that you've got more strength to the downside for GBP versus AUD. Okay, it has gone there. So let's just continue drawing that ABCD. Your first option basically is AB equals CD. Your second option is to first find your C point. Okay, so once you find your C point here, okay, you see your C points at 50%. Now based on the menu that I've provided you guys, or you guys who are familiar with the table that I've shown you guys in knowing how to match C point and D point. Okay, so C point, once if your C point is at 50%, then you could project your projection at D at 200%. Okay, so roughly you pull your B to C all the way there and you look for your 200 points. So your 200 is right there, right? So you've got two lines now. Okay, so these two lines are your potential TP areas, your probable TP areas. You don't actually have just one line, you've got your two lines, okay, two options. You could easily, if you are conservative, to take profit just before it reaches any one of the line. But it's probably best for you to tweak the numbers to the psychological levels as well in order for you to enter rightly in terms of the pricing as well as your take profit prices. Okay, so let me just go into the questions at the moment. Okay, so yes, I've got a lot of yeses and rights from Niti. Thank you very much for that. And what about Tian Shunman? Are you clear on how you identify, or following your questions, if I've got your question right, on how do you identify the ABCD? So that's roughly it. Okay, you want to always look for a downward move with a correction first. Okay, but I just want to remind you that when you look into an ABCD, once it goes downwards like this, right, and it goes up, you would need prices to first fall a little bit more. Okay, just so that you're sure that that is C. Okay, if not, it might just bounce off, and then what happens then is you've got a failed pattern. Now, to prevent failed pattern, hence the reason it is highly crucial for you to compare the time frames and for you to get the backup from fundamentals and use strengthening that trend that you are riding on. Okay, so that's the most important thing. So this is your A. Let me just draw that. Then you've got your B right here, C, and your D. So these are the zone that you could easily TP area, or we also call it the PR Z, which stands for probable reversal zone or potential reversal zone, whereby this may be an area where prices could also bounce upwards. Okay, but in this case, since you've compared your time frame between 1 hour, 4 hour, and daily, then you're looking into more potential to the downside, or almost strength to the downside, because of the angles and more political, economical sort of feedback and backup on the new side of it for pound to be bearish or just getting much weaker. Okay, so that is feeding the direction for the GBP versus the AUD. Okay, guys, so that's basically for GBP AUD. Let me just check on questions. All right. Oh, good. I appreciate that. Thank you very much for that. I hope that's clear. That's good. Okay, good. So these are the two areas you could do. Now, the other thing as well, based on the GBP AUD nitty, that's another thing here. Let me just... Now you've got your big ABCD type pattern. Now you could see that fall there. You see, this is another practice for you, Tian, is that you've got a fall here. All right. Now that fall followed through by a correction. So again, this may be a potential ABCD as well. Okay. So further downwards, right? So we can then draw a separate line right there, a separate ABCD matching with this bigger ABCD previously. Okay, so we'll just move that one away, and what we do then is we'll change the color of the line so that you can get separate ABCD patterns. Okay, so here we go on to the yellow pattern, a yellow color right there. So let me just... Okay, now I would like to make sure that C, if at all my A, we're following the yellow ABCD pattern now. Okay, let's forget about the red one for now. Now if at all I've got my A right here, B, and if I pull my Fibonacci, I would like to just make sure that my C point, it's a minimum of 38.2. Now here you could see that it's not really the case right there. So what you can do then is to look for a lower, you can always adjust your A point. Okay, now if you've got your A point right there, then it's close, not too close, but it's better than having it at a 23.6 area. Okay, so if my A started there instead, okay, right, so I'll make that point there my A instead of the higher up one, because I would like my C to be a minimum of 38.2. All right, so let's say that's 38.2 roughly. I double click that, bring that downwards here, and I've got a further down area there. Okay, so this is my second ABCD pattern in yellow, so we'll do it right there. Okay, and we'll just do that there. So we've got an ABCD right there. Okay, and because we'll take the C point as 38.2, then I've got two areas that the D point could potentially be. Okay, that's your 224 and 2618. Okay, and we'll just do that 224 right there, and 261.8. Okay, and I'll double click that off, and if I minimize that, you'll be able to see you've got a couple of projection area there for your D. Okay, so yeah, in my opinion, for the GBP AUD on a daily chart, we've got a bit more room as it has passed through that zone there between 1.6431 to 1.6082. It's past that. It's giving more indication that it's got more power to the downside due to prices being under all three lines as well. Then you've got that as your next potential zone, reversal zone, as well as your take profit type zone there, marked by that. Okay, so you've got a bigger ABCD marked by the red line, and then you've got the yellow ABCD there, so giving you more potential to the downside based on these two ABCD patterns. Okay, so this is a good play of price as well and patterns at this moment of time for GBP AUD. Now if I go into the 4-hour chart, perhaps the 5 minutes chart, to give us a bit of an idea of what's going on at the shortest term. Now here itself, you could see that prices or candles have just found a resistance at the 200 moving average there, which is a good sign, giving more momentum to the downside. So definitely we're looking at more play by the bears pulling prices down as opposed to the bulls pushing price up for the GBP AUD. So more bearish sentiment for the GBP AUD. Okay, as you can see, we've got candles here on the live chart as well, giving you more strength by the bearish candle, and it is definitely has found that whole resistance there. And if I zoom in more, you could see lots of power by the sellers pulling prices downwards. So that would give us more reasons for the ABCD to actually be a fruitful, successful ABCD pattern. Okay, so that's basically it. And we are also looking at more prices falling below the psych numbers as well, as it is happening right now. And that's a good sign for the ABCD pattern that we have just drawn together, identified together. So hopefully that would give us more room to reach that TP area and that reversal zone between 1.5521 to 1.4858. Okay, guys. All right, so that's for the GBP AUD, and the next one to look at is the AUD USD. So let's just look into AUD USD at the moment. Let's see if I've got it here. Okay, let's just AUD USD. All right, there you go. Now I've got my AUD USD shown on the daily chart at the moment. Here itself, I mean, just at a glance with the 1 hour, with the daily chart here, we've got lots of support. We've got price picking up as far as I can see. We've got prices, current prices at 0.7594. Okay, so if you look at the last two digits of 94 or 93, we're looking at only 7 pips under the 00 psych number. So it would probably be best for us to look into prices appreciating more first, perhaps beyond the 0.7600 area, and once it does actually go or appreciate further above the 0.7600, then we've got more comfort in thinking of the bulls dominance over this over the AUD USD. Okay, if we go into it based on the daily chart, as you can see, loads of support and play to the upside. So there may be a potential upside move for AUD USD, but let's just compare that with the 4-hour chart. And I've got some questions as well here, so I would then go on to the questions. Yes, Veronica, how are you doing, Veronica? You've got CADJPY and GBP USD. Okay, no problems. Let's look into GBP. After we've looked into the AUD USD, we'll go into the GBP USD as well as the CAD JPY. Okay, so I've got yeah, lots of interest this week on the GBP, which is a very good sign, because definitely we've got lots of hints by banks as well, looking into more and more how do you call that, impact volatility as well expected for the pound in general across many other pairs. Okay, so this is a sign of more trading opportunities involving the pound. So I'm glad to hear that you guys are also asking about pairs that revolves the GBP or involves the GBP. Okay, that's a good thing. All right, good. So we have got, I mean, just a hint for you guys as well. You've got all these interest rate decisions by various central banks. So you've got your currencies matching with these countries. You know, you've got the pound, the yen, what do you call that? You've got the pound, the yen, as well as the Federal Reserve, as well as USD. Okay, so these and the AUD because of the RBA's rate decision as well. So these four to play along, these four currencies matching with expected volatility in the market with volume and liquidity as well. It's a good play of the market. Okay, so here we're looking at AUD USD. Now this is looking challenging. As it is challenging, it's also giving some opportunities through patterns here as well. Okay, now here at a glance, I'll tell you what I see on the AUD USD 4-hour chart. Okay, I'll tell you what I see with what most pattern traders do, and then we will evaluate it further whether or not these patterns are actually high probability pattern. Now here we've got a pattern as such, potentially. Okay, this is an M-like pattern made up of an A, B, C, D. Okay, and the thing about this pattern here is that once you've got ABCD, you could potentially trade it as the ABCD pattern, matching the AB's length, the CD's length. But once it does reach that D area, there is a potential upward move. That's due to the upward rise price here, and that's my X here. This is called an M-like pattern. Okay, an M-like pattern usually has got the A, B here, C here, and then D. And the D, it's usually shorter in terms of length, or higher in terms of its length compared to the D. Okay, and then you've got your C shoulder here. Usually it's lower in height, okay, compared to your A area here. So that's your M-like pattern, and usually once it reaches the D-like area, we're expecting price to rise. So M-like pattern is a bullish type pattern. Okay, so let's look at that. Now, whether or not it's going to be a successful M-like pattern or not does depend a lot on the trend. Okay, so this is a question to you, Veronica. You've asked about AUD USD pattern. What are your take on the trend overall? I mean, in terms of fundamental data releases and all that, if you consolidate all these coming under the category of fundamentals, what's your take on the trend for the AUD versus the US dollar? What do you think? Or what do you guys think as well? Let's just share, and then we will see reasons for why a pattern could actually fail, or a pattern has got high probability for it to succeed. Okay, so it's all down to the trend as well. So here itself, now there is a bit of a uncertainty going on with the three lines here. Based on the 4-hour chart, this is what I could see. I could see that prices are under all three lines, which is a good sign to look into the downward type movement, but at the same time it clashes with the movement of the three moving averages. So perhaps you do find prices to the downside, I mean in terms of being under the three lines, but the three lines does not match, giving you acting as a strength indicator in terms of trend. Okay, it's not giving you strong indication that the sellers are dominating so much, because the three lines are not moving downwards clearly. Okay, as you can see, the three lines itself is moving sideways. Okay, now if I go into the 1-hour chart, let's look at what's going on in the 1-hour chart. With the 1-hour chart itself, we could see more strength to the downside, but again the three lines are not giving us a clear signal, because you've got three lines pointing at 3 o'clock, and then you've got the prices correcting there. Now here, if it's based just on patterns and not having a clear indication of the trend, what most pattern trader would do is to simply just quickly draw an ABCD and trade it that way. Now it could work, it could sometime work and sometime not, but then to go into a high probability low risk trade, you would need to really make sure that you are riding that pattern based on the trend. Okay, so the trend is highly crucial. Okay, here you've got conflict between the movement of the three lines here. Okay, the moving averages, we call it the EMAs. Okay, the EMAs itself stands for exponential moving averages. I use the 50, the 100, and the 200. Okay, so the 50, 100, and 200, in an uptrend like movement, the three lines should move upwards like this. Okay, that means you've got a gap in between. They are moving in a nice angle upwards, and that's a good sign. And then you need to have all the candles moving above all the three lines. Okay, and that's a good indication of a strong uptrend. Now on the contrary, if it's downtrend, then you want the three lines to point downwards, and they should also have these three lines should also have a gap in between, pointing very nicely downwards, and you want most of the candles, or the current candles, to move further away as possible, under the three lines, and that's a good indication of a strong downward trend. Okay, so that's a bit of a hint for you guys as well. So this is how you use the moving averages as well. So let's get back to the AUD USD before we go on to the other pairs that we need as well. We are on AUD USD, so GBP USD and CAD JPY. Okay, so let's do that. Let's erase all drawing. Now here itself, of course, if you pull the Fibonacci, and like I've mentioned, and just see that from an ABCD perspective, you can easily trade that, just ABCD perspective. Okay, but that might just increase your risk and lower your probability for that pattern, because if at all you're not sure on the trend direction and there's not much backup for the trend, then that pattern might just reverse on you. Okay, so here it's easy enough to just draw an ABCD pattern. You guys already know how. You know that the AB equals CD is one option, and then you use the C point and match that up with your D point Fibonacci extension ratio. Okay, but here my focus would actually be more onto how much the trend is playing. I mean the trend, because the strength of the trend would then give you more possibility of riding more patterns. You could see formation of patterns would actually continue and giving you more trading opportunities once you are in a momentum type trend and the trend's really strong. So here let's go into the 5-minute chart and let's look at what's going on as of now for the AUD USD. Now here itself we could see that we found some sort of resistance right there. We could see that prices have gone past the three lines as well, and they are under the three lines of the candles as of now, under the three lines, and we could see that a bit of a correction at the moment to the upside, and now we've got candles. This is based on the 5-minute chart. We've got the bearish candle now forming, looking at possibilities to the downside. If we compare that to the 15 minutes chart for the AUD USD, you see that the same play occurs. Now we've got a big downward move here and then a correction. Now that correction itself here is not as strong as that move there, okay, which is a good sign that there's more possibility of a downward type movement. Now if you've got a trend going this way, okay, and then you've got correction that way and come in, and then the correction that way and then come in, and you spot that these corrections are getting smaller and smaller, and that's a good sign, mainly a good sign for the downward move, because what that means is that these corrections are not strong enough to create to overcome the strength of the bears. Okay, so this may actually be happening at the moment. Here we're looking at more momentum to the downside. Here, as you can see, more dominance by bearish candles as well, and this is based on the 15-minute chart. So here itself, from 5 minutes to 15 minutes, again there are more strength to the downside. okay, for the AUD USD. Now let's move on to the 1 hour chart. Now here, 1 hour chart, we again looking at angle itself. You know, it's giving us more hint to the downside, of course, and with that we're looking at prices peeping out of the 50 moving average, heading downwards, and this is also a good sign here because we have got a correction here on the one of the moving average line, and not only that, we also have got an indication of a reversal type candle going on. Okay, you can always mix and match with whatever you've learned, whether it's candles, tools and techniques that have helped you to identify reversals. You can always apply all that into the geometric pattern type trading method. Okay, so here itself, if I have zoomed in, you could see that that middle candle there, you've got that with the other candles creating a sort of resistance zone. But not only that, you've got the candle there in the middle have got a small body, but it's a bullish candle with a small body and a longer wick, and that longer wick to the upside gives you a hint of a reversal type candle going on right there. Okay, it's got not enough momentum to push upwards with a strong body upwards, so it has reduced its strength there by creating that wick, and that wick together with the other candles here with the bodies in a line have created a sort of strong resistant type line. So what you do next is you can easily look for the highest body right there. They're all more or less the same in terms of the length there. So what you can then do is mark the body, highest sort of body, they're all the same length there, so that's good, and then the highest wick, so that becomes a sort of zone. So that resistance zone there is what we have marked that there, and it has been proven to be quite a strong or correctly drawn support resistance zone, only because we've got strongish candles piercing through it and various resistance, support, and various other points that are significant. So that's a good sign. And now with that resistance zone, we've got prices now and candles now trading quite far away from that zone, pointing downwards. So I would only see it as a hint of more selling power. Okay, so as we pull this from the very top here all the way down, we would like to look at whether or not the C point potentially could be a minimum 38.2, and it does, and it's right on the dot there. That's 38.2 as well in terms of its body, and that's a good sign. Okay, so let's say if I use that point as my A, that's my B, C, then I'm looking at a potential downward move by marking it as an A, B, C, D, starting from there all the way downwards here. And if I go in there, double click that, move that downwards here, and pointing that there, we have got that to be here. Alright, so I've got an A here, B right there, and then we've got my C, so my D potentially be there. Now C was C showed us the point where it landed at 38.2, so we're looking at the potential D area in terms of projection of the Fibonacci ratio at 2.24 and 2618. Okay, so we'll just mark that very nicely there, and we'll look for the 2.24 as your additional TP area, as well as the reversal zone area. So we have got that to look at for the AUD USD. Okay, and once we just cross that out here, sorry, that's your B to C, and you cross your A to D to look for your ideal entry for your sell. This is where we've converted this ABCD pattern to a geometric pattern, so it's quite close to ideal entry area there. So the ideal entry area has been marked off as 0.7589. So let's say that 7589, I'll just write that down, give me a second. So let's say based on the centroid area here, the middle area here, I've got pricing, the price marked at 7589. So let's say 7590. Okay, right. Okay, now we've got 75.90, but as we've seen it, we've got 89. So to be more conservative, I would then base this price here on the 80 site number, 75.80. Okay, and ideally to enter the, based on that site number, probably be best 10 pips under the 80, so that would give you 70. So ideally you've got 75, 70 as your potential entry area based on the principles of psychological numbers. Okay, so you've got your 7570. So this whole area here could be marked as your potential reversal zone, as well as your potential TP or take profit area. Okay, so you've got your A right there, B right there, okay, C right here, and your D in within that area. So that's what we're looking at as a potential. Okay, so that's your AUD USD, and we've got prices not really under that centroid area as yet, so it's not really a ideal entry area as yet. So we want to wait till prices go under the centroid area to give you trading opportunities to the downside for the AUD USD. Okay, hope that's clear for you guys on the AUD USD. Let's just move at the moment to the GBP USD as well as the CAD JPY. Okay, so we've done the GBP AUD USD. We're going into GBP USD at this moment. Any questions before I move along to the GBP USD and CAD JPY on the AUD USD? Yes, are clear. Site numbers, yes, I could. Okay, just very quickly, we've got site numbers is based on the last two digits of the price. Okay, but the four sets of psychological numbers are 00, okay, 50, 20, and 80. Okay, so this is 80. So you got 00, 50, 20, and 80 is based on the site number. Basically what it means is we've got the price now, let's say at 75. It's 5 digits, will make it 4 digits only, so 75.95, let's say that's the price now for AUD USD, let's say. Okay, so what you want to be doing is to always look at the last two digits. Now the last two digits, if at all these last two digits are any one of these numbers, then it's not an ideal buying or selling price. You shouldn't be buying or selling when these last two digits of the price are too close to any one of these psychological numbers. Okay, so what you would need to do is first to match this last two digit with which psychological number, meaning that if it is 95, let's say prices is going up. Okay, let's say you're looking at prices going up or going down, doesn't matter. If it's going up, then you want to look up and look at 95 being closest to which psychological number. So 95, if it's going up 96, 97, 98, it's closest to the 00 site number. So if it is closest to 00, then if you want to buy, you want to always add 10 pips. Okay, you add 10 pips to buy, 10 pips on the psychological number to buy. If you want to sell, you want to minus 10 pips under the 00 to sell. Okay, so you can buy at 10, you can sell at 90, like this one 50. You can buy at 60 because you plus 10 is 60. So 60 would be an ideal area for your long entry, and if you want to sell, you need to go under that 50 by 10 pips, so that gives you 40. Okay, now if it's 20, then you plus 10, that's 30. So 30 would be good for the buy side of it, and you minus 10, that gives you 10. So 10 would be good at your selling type. If it's 80, 90 will be your good buying side, and 70 would be good for your selling side. Okay, so hope that is clear. I can always explain that further in an email or something for you as well, Niti. So we can always communicate further on that site number if it has not made much sense for you. Okay. All right. Okay. Thank you very much for that, Niti. Okay, so we'll go on to GBP USD at the moment. Let me just clear off that all these tools that I've got, all these drawings in yellow. Okay. All right, let's see. Now, GBP USD. So we would then go into this GBP USD. Let's see what's going on. Okay, so here we go. Veronica, GBP USD. We're looking at the 1 hour. Let's go into the 1 hour first. We'll compare 1 hour, 4 hour, and daily chart. Now here, let's zoom in a little bit. Let's look at what's going on. Now here, at a glance, I could see loads of uncertainty, waiting for further breakout opportunity. If the breakout were to happen, it could actually happen significantly. It's got a huge move. The reason why I say that is because we've got this long awaited breakout from this long a sideways type trend, which is a 3 o'clock type trend. Okay, so this 3 o'clock type trend usually gives us lots of uncertainty. So that is what's going on in the market at the moment for the pound versus the dollar. And we know that in the UK itself, and everything revolving pound, you've got the Brexit and everything else is just going sideways. You've got lots of uncertainty, a lot of holding on to things before bigger things happen and things like that. So hence the reason that's reflected in the market. So we've got a big sideways trend. The longer that sideways trend persists, the bigger the breakout up or the breakout down would be. Okay, so this is one thing to look into. So if I clear that away, okay, now we'll just look into this itself and zoom in a little bit and look into the behavior of candles and prices. Now here itself, we've got candles itself starting to move lower or under the three moving averages, which gives us a hint to the downside. Okay, it's signaling downward sort of momentum. Now if we look right to the price, the current price at the moment is at 1.2161. so here is where we practice the psych number thing. Okay, so let me just do this. Current price 1.2161, let's say. Okay, 2161. Right now, we are looking at the probability of prices to the downside, because we've got the candles under all three lines. We've got the angle to the downside. We've also got news and data, and everything else is pointing for the pound to the downside, bearish sentiment and everything else. So if we're looking downwards, okay, we need to look into the site number as well. Now look at the last two digit. Now the last two digit is 61. To the downside, which psychological number would it actually be closest to? And based on what I've sent you earlier on, we've got a 00, 50, we've got the 80 and 20. So here to the downside, we've got 50. 50 being the closest psychological number. Okay, so if we would like to look into more bearish or selling power, okay, we could see that clearly, much more clear if prices were to go under the 50 by at least 10 pips. So that would give you 40. So once prices have gone to the 1.2140 area, that would be a better indication in terms of price action for more selling pressure. Okay, so that would also be a sort of ideal entry area is 2140 and below, because these prices are where it's under the 50 psychological number. Okay, so here itself we're looking downwards. You're looking at potential downward move. You're looking at this price at 1 to 140 to be your ideal entry and things like that, or ideal area to look at once prices have gone under 50 for more bearish momentum. Then we look at bearish type pattern. Okay, so bearish type pattern, we can see that we've got a move downwards here and then a correction, and that correction is quite nice because it's at the moving averages area, and then it rebounded, and then it's on its way down. Okay, so here itself you've got a potential A here, B, C somewhere here, and more projection to the downside. So once you've got that ABCD pattern drawn, you can then convert it into a geometric pattern, and once that's geometric pattern, you could then find that centroid area to look into your ideal entry. So let's do that just now. We'll erase that, and second, we've got the first line to be drawn would be, let's say, from that very top area there all the way down here, and we've got your A to B. Okay, so that's your A, B, and then you've got your C around there. So let's just draw your B to C area right there. Okay, so you've got your A, B, B, C. And what you do with projecting your D is just to use the first option of AB equals CD by pulling the AB equals CD area there, and you can always redraw that AB area. So there you go. You've got a very nice, clean, clear ABCD pattern. Okay, potential ABCD pattern here for the GBP USD on a 1-hour chart. What we are trying to do is to look into how far prices could actually go down to, and that is where we project the D point to be. So let's say we have got the first option AB equals CD right there. So that's your first option or first possibility of where the D could potentially reach to. Okay, so you got A, B, C, and then D. Now, once you've done that, we do the Fibonacci side of things by pulling your A to the B to look for the point where C have actually landed. Now, C looked to me like it has landed very close to the 61.8 area. Now, the 61.8 area or 61.8 Fibonacci ratio, retracement ratio, is one of my favorite ones. So that would equal to 1.618 in terms of the projected D area. So second step using Fibonacci is to pull your B to your C like that and look for your 1.618, and then 1.618 would be right there. Now we would then have uh, two possible points, two possible D areas, and that gives us ABCD projecting ABC projecting D to either the 1.2062 area to 1.2052 area. Okay, so here the question would be, we found the projected D area or reversal area or TP area, okay, take profit area, but where do we enter? Now this is where we would convert the ABCD pattern into a geometric pattern by simply combining A to the D to look at the centroid area here. That centroid area would be here, right down there. Okay, now you've seen that prices have actually visited that area, but then it's making a bit of a comeback upwards. Okay, it's correcting itself. Now based on that centroid area, it's 1.2165. Okay, so let's just do that. 1.2165. Now 65 last two digits, closest to 50. If I would like to sell, I would minus 10 pips, buy that 50 from that 50, giving me 40. Okay, so I would need to wait or do a pending order at 1.2140 to give me an ideal or conservative entry point for my short for shorting this GBP versus USD. Okay, now this area here, 1.2062 would be an ideal TP area as it is above the 50 psych number already, so that is still a possibility for you to go into 1.2062 as your potential TP area. So yours 2062 as your TP area. Okay, so this is entry area here, and this is your potential TP area there. Okay, and I'll be using most of the time the risk to reward ratio of 1:1. So if at all, let's say for example you're projecting about 80 pips for your TP or your potential profit, then your potential risk using the 1:1 ratio will be again another 80 pips. Okay, so that's 1:1. So that's basically it for the GBP USD on a 1-hour chart. This is some potential trade opportunities here that you can actually see following what's going on the news side of it, media, mainstream media, as well as news data. Economic conditions of the UK as well has been quite disappointing, with a couple of other factors really reeling the economy downwards, and its UK rates, pound rates as well, has been actually falling tremendously. Okay, so there are more momentum to the downside as opposed to the upside for the GBP USD. Okay, so here we go. Okay, oops, sorry, accidentally click that. Okay, so here we've got your JPP USD covered there, and now we'll be moving into the last pair, which is CAD JPY. Okay, let's do that right away. Erase all drawings, and okay, let's look at CAD JPY right there. I'm just going to erase or get rid of all previous objects, and there we go. We've got the CAD or Canadian dollar versus the yen JPY. And here itself, at a glance, we're looking at the 1 hour chart. We've got entanglement of the lines. If I zoom in a little bit more, that's one thing that caught my eye there. We've got uncertainty brewing there, and we've got the 3 lines or exponential moving average just not clear, not giving us a clear indication of the movement of candles, whether to the downside or the upside. Okay, we've got it just entangled to one another. That's not a good sign. That projects uncertainty or gives a hint of uncertainty. So let's just look into the 4 hour chart. It's the same there as well. So you've got a 1 hour and 4 hour giving you similar sort of hint of uncertainty, but it's a clearer uncertainty in the 4 hour chart based on the 3 lines moving sideways, the 3 exponential moving averages. The other thing as well is we've got the candles trading in between the 3 lines, giving you more indication of uncertainty. Okay, so if you've got both the 1 hour and 4 hour giving you hints of uncertainty, wouldn't be the time frame that I personally would want to choose from the other time frames to be trading or base that trading on, because it's not giving me clear signs in terms of trend especially. So if I go into the daily chart, I could then see that prices have found resistance, and again we've got candles sort of trading in between the lines, or just too close to the lines, not really trading under the 3 lines or above all 3 lines. So that's not a good sign for me to be using either the 1 hour, 4 hour or daily chart as the charts that I would do my analysis. Of course, in terms of angle, we do have a biasness to the downside for the CAD JPY. We've got some news revolving the oil that are connected to the CAD movement, so that would need to be summed up properly. We would need to combine strength coming from news data releases from both countries, Japan and Canada, to look into strength, and then once we get that cleared up, then I would suggest to go into lower time frame to look into trend. Okay, so because the 1 hour, 4 hour and daily has actually given me sort of mixed signals in terms of its trend, I would then prefer to just try to look into the 5-minute chart and see whether or not I've got a sort of different view on the trend. Now here itself, based on the 5-minute chart and CAD-JPY, we see that it's not too clear because we don't actually have these 3 lines, exponential moving averages as well, moving at an angle apart from a 3 o'clock type angle. Of course, we've got the candle just just under the 3 lines, but again it's heading upwards, it's heading in into the territory of the 3 lines area, and that's just not really a clear thing. So let's just move on to the 15-minute chart now, and we'll look into anything else. Now here itself, I mean, from the 1 hour, 4 hour and daily, looking at the 3 time frames itself, it looks to me like the 15 minutes as well as the 5 minutes previously are mirroring the whole uncertainty thing, and this is what I could see. Now if you're looking at the price itself, you've got 78.32. If it's 0.32 itself, it's probably closest to the upside would be the 50 moving average, the 50 psych level. To the downside we've got 20, of course, but in this case, just looking at it at a glance, if you want to keep it simple in terms of trend, based on the clock angle itself, it's just not clear from 1 hour, 4 hour to daily chart. And now as I move along the 5 minutes and 15 minutes, I see the clear reflection of the longer and medium time frame as well reflected onto the shortest term. So there's just too much uncertainty on the direction for the CAD-JPY at this moment of time, as I can see, and as you can see that as well, we've just got too many uncertainty. But based on pattern itself, I mean, we've got loads of movement here. Now we're looking into the 15 minutes chart here. If it's just solely based on pattern without looking into trend, but you would need to mix the two and be sure of the trend first and then look for pattern. But let's say we're just based on pattern, solely on pattern, which has a higher risk and a lower probability for that to happen. But I mean, for the results to be portrayed. Here itself, if it's solely on pattern, we're looking at a probable or possible pole and flag pattern. Okay, that whole fall of prices there with a longish bearish type candlesticks there would make up the pole of the pole and flag pattern. So the flag-like pattern usually comes in a form of a channel like that. Okay, so it's trading at an angle like that, so that's your flag-like pattern. And what usually happens is there is a bias of a breakout to the downside, since this is a possible or probable bearish pole and flag type pattern. So here we have got the pole area here, and then we've got the flag there. Okay, so usually what could potentially happen is, if at all, the trend is it's also strong, and it complies with the bearish flag and pole pattern, then you're looking at a big probability or possibility to the downside. The downside move, you could easily measure the potential. Give me a second. The potential number of pips play to equal the length of the pole in pips. Okay, so let's say the length of the pole in pips from here to here, let's say just an estimate is 100 pips, then you could measure from that area there, the highest area of the flag area there, from that point itself you could minus 100 pips down, and that is where your TP area would be. Okay, roughly as an area. So again, you could always take that as an A, B, C, D downwards as well. Okay, but this is a clearer a flagpole pattern as opposed to an ABCD type pattern. But again, it works. The principles of ABCD works in a flagpole pattern too. Okay, not all the time, but it does actually get strengthened with the play of the trend situation, with the trend and how clear the trend has been. Okay, so that's basically it for the CAD JPY. I'm not too keen in looking into longer time frames like the 1 hourly, 4 hour, or the daily chart as a chart or a place where I would look for pattern, since the trend has not been clear for me. So it's not a good sign. Okay, so I wouldn't do that. I mean, if at all I am looking into trading the flag pole pattern type pattern, then I would first make sure that I'm clear with the breakout of that prices downwards going under 78.20 and lower, to give me an indication that definitely it's more strength to the downside. But I would then look into the 15 minutes chart as opposed to the longer time frames at this moment of time. Okay, so hope that's clear, Veronica. Hope the GBP USD and CAD JPY has been good to you in terms of the trade. For the other guys, hope today's session has been clear in answering your current trade questions. Okay, any other questions at all, guys? All right, good, Veronica. Most welcome. Okay, I guess that's all I have got for you guys today. And following up on this session, we can always follow that up with the Wednesday session for the live account holders. And for you guys who have actually asked me about account opening, both demo account and live account, I could very easily send you the link to your email, or best is to send me an email at kenny@orbex.com and request me for a link to guide you through in opening a demo account. We can always get the customer support team here, and you can always simply indicate to the team here as well, saying that you've attended the webinar and you would like to open a live account or a demo account, so that we can be of help to you. Okay, so that's basically it. Okay, so if we don't actually have more questions, I would like to end this session for today, the 31st of October, and we will then see you on the 2nd of October on Wednesday for live account holders on the troubleshooting session. Okay, guys. Now, firstly, I would like to thank you guys for attending today's webinar, and we'll see you again, if not Monday, then next week on if not Wednesday, then next week on Monday. All right, guys, have a very good evening to you guys, and thank you very much. Bye-bye.